Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing in a narrow range, and we know that bigger picture, the market is also in a very balanced state, and our short-term bias continues to be neutral. So heading into today, we have to be quite nimble with our real-time intraday bias and assess the situation in real time to see if we are seeing signs of directionality. So we're essentially gauging if the market is ready to either break out or go directional to the downside. That means we have to look for excess strength or excess weakness in real time. And to gauge that, we'll be watching how fluid the price action is in the S&P as well as the other markets. And then on top of that, we'll keep an eye on the advanced decline and the NYC tick. So if the advanced decline line is trending rapidly in one direction, if the tick is holding above zero and printing some nice upward values, or holding below zero and printing some nice downside values, those would be indications of directionality. And if clear directionality is present in the market, then we'll have to be careful taking fade setups. So on the upside, we have resistance at 78 to 80 half, and the idea is that in order for the market to put in any kind of sustained breakout, we need to see broad market strength and sustained upside momentum. A lack of strength and a lack of momentum at 78 to 80 half can lead to a failed breakout attempt. But if that underlying strength and that sustained upside momentum is present in real time, then the door would be open for a breakout above 78 to 80 half. And then on the downside, we have support at 66 quarter to 68 half. We have this week's low at 65 quarter. And in order for the market to break down below initial support, we need to see broad market weakness and sustained downside momentum. So if we're heading down into initial support and the advanced decline line is quite negative and rapidly trending lower, and if the tick is completely below zero and printing some nice downside values like -7 to 800, then even though there can be a reaction at initial support, eventually that downside momentum can lead to a break and a test of the zones below. And if we're breaking down on high volume and high momentum, then we may not get much of a response even at 60 half to 62 half. And at that point, we could even go down and test last week's low at 24.57, the 56 half high volume node, and potentially even lower. So that's something that we'll have to gauge in real time. But until we get that directional movement, the market is in a balanced state. And it's very two-sided. Neither side is really dominant until we get either a breakout or a breakdown. So again, our short-term bias today is neutral. We have to be open to the market moving in either direction. The bigger picture bias is bullish. So if in real time we're seeing a lot of bullish signals, then there is a chance that the market could put in a breakout above 78 to 80 half, but that is something that we'll need to assess in real time. So those are the main ideas heading into the open. Let's stay flexible and nimble today with our real-time bias. Let's see if the buy side can hold ES above 72 quarters, 72.75, and we'll take it from there.